IB Morning Dave. We're at 8:40 now.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
'Tis time to find out what your situation really is this morning, up to the minute, with the resources of Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. It's good to hear you.
Hey, good morning, Dave. You had a great weekend, a little camping, a little birthday party for my granddaughter. So, hey, it's good to be back and going strong. As the markets weren't bad yesterday, Dave. We actually got mostly green ink across the board yesterday.
Yeah, no complaints whatsoever. The Standard & Poor's 500 actually stuck above 6,000 now for 2 consecutive days. Gained about $5.50 yesterday. $61 up on the NASDAQ exchange, which means we start this morning at 19,591. Dow was off by $1.11, and you and I were kind of noodling it through, and that probably was the market reaction to Apple's new developer conference release, because they didn't say they had anything new whiz-bang to offer us on the iPhones along the lines of artificial intelligence. I do notice that my beta test menu will let me download iOS 26 this morning on a beta test. It's still developer beta, so I won't do it. But other than a pretty site, it doesn't look like they're really offering a whole heck of a lot exciting, and that didn't help their stock any, right?
No, it didn't, and that's probably what drove the Dow down yesterday, because it was down. I think I saw it was down like 1.9% or something like that yesterday. So that would have been enough on a price weighted to to hold the Dow down a little bit.
Yeah, that would be enough to be able to give us that $1.11 loss in the Dow, which is why I think you could safely say that's about as close to flat as you can get. It's kind of a quiet news week until we get to tomorrow, when we start getting some heavy stuff, because it's inflation week now. And we get the CPI is tomorrow. Yeah, CPI is tomorrow, and the producer price index is Thursday. Am I remembering right?
Yes, sir. That's correct.
So that kind of leaves us in a bit of a doldrums today by comparison, because we're at the point where there's not a lot going on in terms of earnings left. We got a couple, 3 that are worth sharing, and we're mostly just talking about gossip and whatnot. And the big gossip is President Trump and his representatives and the Chinese talking over in London. And I'm finding this kind of interesting. Our delegation over there talking about a tariff settlement with China was all hearts and flowers, positive progress, everything sounds good. We're approaching a handshake deal on the rare earths that China has banned shipments to the United States on, and everything's up and happy and roses. Crickets coming out of China, and when we get to the overseas markets, you'll see the message they sent to their stock market, and it's exactly the opposite of what our people are saying. I wonder whether the Chinese are trying to make a point or we are. But it's a coin flip in my mind. How about you?
Yeah, it is. But I did see, though, a little blurb that said, the talks with China are having a little bit of an effect on interest rates. The yields are sliding down just a tad. Nothing to get too excited about, but at least we're getting a little further away from 5% on the 30-year fix. So that's good.
That's kind of a cough up your cookies number when you start getting up toward 5% 30s. I think the rule of thumb is what we really need, even if the interest rates are uncomfortably high, we just got to get stability. This all-over creation stuff where you can make 25, 30 basis points in a day just because of upsets on the market, stability is really what we need more than anything else right now. So a slow, gradual retrenchment wouldn't be a bad thing at all, obviously going in the right direction, too.
Yeah, well, yeah, that's true. It'd be nice if we just level some stuff off. You're talking and I'm reading, but I got this little thing just came across one of my websites. It's just funny. It hit me. How will Wall Street's taco theory meet CPI reality?
Yeah, we were talking about that last week. The taco trade. Trump always chickens out. I can't get it. You and I have been talking about this for a long time. The biggest beef I've got right now about the Trump administration is the fact that they play it so close to the vest as to why they do what looks weird on its face. if we knew why they were doing it, probably we wouldn't be as worried or as upset as we are. But the taco trade, yeah, they trade as to whether or not he's going to change his mind in 3 days.
Yeah, I thought that was kind of funny.
It really is. I love the phraseology, the taco trade. You know it was invented by the opposition, but it's still fun to make fun of. Talking about Apple again yesterday, you mentioned that the tech geeks that were driving the Magnificent Seven were somewhat less than impressed with Apple, but the other Magnificent Seven has been coming back pretty well of late. So it's a broad-based rally that we're seeing with the S&P 500 and Nasdaq getting close back into nosebleed territory. But it's broad-based, but still the Magnificent Seven are roaring back. Even Nvidia managed to get back over $3 trillion in market cap last week. I can't see this thing holding Apple down for long. Can you?
No, I can't. And the other thing that came out yesterday was some numbers on small cap. Small cap's really been roaring ahead and having a good month. So you got to like what's happening with them. On the other hand, we have companies like Paramount. They're cutting 3% of their U.S. workforce. That might put a little bit of a damper on Paramount.
That's right. Well, they've got that merger that they're planning to do and splitting up the different cable channels that they've got and whatnot. Part of the goal they've got is to try to cut back on staffing, I have to believe. Are you there?
Yeah, there. I kind of lost you there for a minute.
Oh, I'm sorry. I was assuming that probably that's relating to their breakup of their cable channels and their streaming service, trying to cut back on the number of employees they've got as well. But yeah, there's one more indication that we do have a cap on the employment right now. One of the tip sheets I have was saying the job market on a macro basis is healthy. If you've got a job that's good, you may not be able to find another one that matches you. We're creating a lot more barista and retail clerk sales than we are the jobs that actually support a family, which is not good news for the economy overall.
No, it's not. You're right. That's that's right. The unemployment number may be staying okay, but the type of job you can get may not meet your what you need to have for your budget.
Absolutely. The only other macro thing that I really have is I got a new set of projections out as to how the Standard & Poor's is going to finish the year. That's something we always have fun tracking down the line. They range from the Deutsche Bank people saying that we're going to finish up the year with the Standard & Poor's 500 at 6550. That'd be a good 6-7% over the all-time record. On the other end of the fence, our friends at Bank of America are still saying we're going to end the year at 5600. In other words, proof positive, even the pros don't know what the Sam Hill they're talking about at this point, right?
Yeah, nobody's got a crystal ball that says this is what it's going to be. There's too many things that can happen between now and the end of the year that from a geopolitical and tariff standpoint, that could put pressure one way or the other. It could pressure on the S&P 500. It could boost the S&P 500 depending upon what those outcomes end up being.
Absolutely. The only other macro news I got is the Congressional Budget Office did throw out the obligatory red flag, and it's something that we're going to start panicking about in probably about 60 days, knowing our friends at Congress. The U.S. may exhaust our debt ceiling measures in mid-August and run out of money. So mark August 15th on your calendar. That'll be the time that Congress will raise the debt ceiling. That would be my guess, wouldn't you?
That's your guess, huh?
It's kind of proven by track record. It'll be August 15th at midnight. They raise the debt ceiling to the point where we don't run out of money. Beyond that, quiet as far as macro, relatively quiet on earnings, but I understand Smucker's is having trouble selling jelly lately, huh?
Smucker's had a rough quarter, Dave. It was their fourth quarter. Revenue missed. They did beat on earnings, however. Their guidance missed expectations as well for this year, and so that has Smucker's not in a good spot. They're trading down a little over 7.33% right now.
Holy crud! What did they say on the guidance? I mean, they don't have tariff issues making jellies and jams, do they?
I don't know. Maybe just a recessionary period. People are pulling back because of some of the things, tariff costs are going up. I'm not sure.
Intriguing. I guess a staple with all the competitors from generics, any staple good with a brand name probably is going to have some pressure during a tentative time economically.
Yeah, people are going to buy the off brands,
Mm-hmm.
when they're price shopping. So yeah, that's the other thing. A little tidbit about Taiwan Semiconductor.
Mm-hmm.
They didn't report, but they did have a little comparison. Their revenue for May was 39% more than it was May of 2024. And their revenue from January through May of this year was up 42% higher than the same period a year ago as well. So they're doing okay. They're up 2.3% this morning.
Welcome again to the Magnificent Seven driving the market, right?
That's right. And then we have another store, Casey's General Store. We don't have those around here, but they've got them in the Midwest and out west. So Casey's General Store, they had a really good quarter. They came in at $2.63 a share versus $1.94. Revenue ahead of expectations as well. They're up 11 1/3% this morning.
Wow.
Yeah.
That's incredible. Resetting the table for the morning. I had a flat day on the Dow, but everything else was up at a sustainable pace, which was good yesterday. 45 minutes before we open, how are we looking this morning?
We've got a tinge of green. The Dow Industrial 30 is not much, up $8. S&P 500 is up $7 right now, and the NASDAQ 100 is up 33. So nothing spectacular, but at least it's in the green. On the other side, we got silver down just a little bit, a little more than a tenth, almost 0.2%. Gold's up almost 0.2%. Crude oil, David, just can't start going the right direction. It's up almost 0.5% this morning, $65.57 a barrel.
We were mentioning before we went on the air. I saw a news item that said that OPEC and Middle East production was set to go up. I was kind of surprised by continuing the price of oil going up. With a little luck, we'll see the change over the next couple of days. Overseas markets, I mentioned that the crickets out of China on the trade talks have a message given in the Chinese market. Mainland Chinese markets were off between 0.5% and 0.75% at the close this morning. Everybody else in Asia was generally up. Over the European community, they were pessimistic yesterday. They look a little bit more optimistic today. We got a mixed bag of UK stocks up by 0.75% halfway through their day. But the German and Italian markets are off by a bit, making the overall balance in Europe about flat halfway through the European trading day. That's where we're at this morning. Let's see what we do tomorrow. How do I get a hold of you to figure out what that does to my retirement plans, Phillip?
Dave, that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And back here again tomorrow morning with an update up to the minute as to what's happening. I will see you then, my friend. I appreciate it.
All right, have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who likes uncertainty? Wall Street certainly doesn't.
Can you tell when I went to the...
Hey, folks, again, I want to thank you for joining us today. Take care. I look forward to speaking to you again tomorrow. Bye.